Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, and it's July 3rd. Hey, we got kind of a short day today, and even kind of report here today. Markets will be closing today at 10 o'clock for stocks and 11 o'clock for mortgage-backed securities, Western or PST or Pacific Coast Time Standard. And then for the 4th of July celebration, and then we'll be commencing back on the Thursday, the 5th. So hope you guys have a good, safe 4th of July. Let's jump right into it. We only got factor orders released today. Oops, sorry about that. Factor orders released today. In April, 8.4%. Forecast was supposed to bring it to basically nil, and it came in at a positive 0.4% in the month of May. So that was good. Now let's take a look here at the headline news. Stock market's up, but then as we started creating this, it actually turned a bit mixed. Nasdaq just recently went down into the negative territory. Um, Today, what's kind of driving the markets is we got the immigration deal in Germany. So there were some compromises done over there. Germany was trying to internally, this was more internally in Germany for the immigration process over there and within her own political system over there. They're trying to get things through so they can make that resolved here. As of course, that's been a big deal globally, actually, here in the U.S. as well as Europe and many other countries. Also on the agenda is the U.S. trade conflict that seems to be continuously escalating. They've been looking at the yuan, which has been kind of weakening to the U.S. dollar, which is obviously not a good thing. Some people think that that might be a way for them to fight the tariffs by devaluing their yuan to offset any higher costs that the tariffs will come in, and therefore keep it the cost point low. And then there's also I guess there's a comment about President Trump going to block any possibility of China Mobile coming into the U.S. For listing it as security reasons, that they may not be able to come here to the U.S. as well. So kind of escalating a little bit here, and we'll have to kind of see if this how this plays out, because typically in these trade wars, it's there's no winners usually involved. So we'll have to kind of see what develops and if anything if we can show any improvement from the U.S. side of things, or if there's any compromise there, how this will all play out here. Let's go ahead and take a look here at the bond market, see how things are playing out. So yesterday we had a price change for the worse, as I had indicated that things were, we started up higher, we were down here when we did this report, and it further dropped, testing the 25-day moving average, pretty much landing right on top of it. It basically challenged because initially, again, it was talking about the uncertainty of the trade war between the U.S. and China, and then they kind of shrugged it off. They looked at the manufacturing data that came in, and then the stock market rallied a bit further as they were in kind of negative territory, and then they rallied as a result. Today, we start below the 25-day moving average, and now we're kind of rallying a bit right now. Now, going into a long weekend, this could potentially help us out, primarily because sometimes stocks don't want to take that risk. The equity traders don't want to take any risk over a long weekend of anything happening from a geopolitical standpoint. And so usually what we have is what they call flight to safety. Sometimes before these long weekends or these events like tomorrow being 4th of July and closing early today. And there's a lot of volatility in the geopolitical arena, as we've been seeing here from the trade discussion, immigration, stuff like that. They may park some money into the mortgage-backed securities and get like kind of a one-day reprieve, so to speak, and be able to improve rates. So today rates are better than where we left off yesterday. We had the pricing for the worst, so we're getting kind of to the point where we had left off yesterday, back to pricing what we saw yesterday. So again, we got some room here. It could potentially rise further. This is showing up 13 basis points, but since we put this in, it's been kind of going up. We're about the tip here between 16 17 basis points higher. So we're actually probably closer right here right now as I'm doing this report. So the good news is, rates are a little bit better today, but again, or about the same as where we first before they had the price for the worst yesterday. So kind of that same level here. All right, folks. That's here's a 10-year Treasury. We're down to about 2.84 right now, as we were up to about 2.87. Again, we get this lot of range between back and forth. It could go one way or the other, and if it drops down further here, this helps support mortgage-backed securities and pushes it higher. If it rises here, it's just going to push mortgage-backed securities even lower, which will cause interest rates to rise. So again, hope you guys enjoyed the rest of your long celebration here at 4th of July. Hope you guys enjoy yourselves and be safe. But if you guys want to get some more updates, like the market close later this morning, come over to Mike Bjork on Twitter, and you can follow me there and get the updates on Twitter as well. Thanks again for watching. We'll see you guys on Thursday. Take care. Bye-bye.